What up, y'all? It's your boy Cash Out K1, man. The walking bankroll, man. Today I'm gonna show y'all how to use your Section 8 voucher, man, to level up, man. A Section 8 hack that most people don't talk about. We ain't gonna waste too much time. I don't like to waste too much time. Let's dive straight into it, man. Now, first thing we gonna do is let's get straight to it. Let me show y'all how to properly use Section 8 voucher. There we go, right there. Okay. Now let's see. Let's see what it say. All right. Yes, Section 8 Housing Choice Voucher participants can potentially use their use their voucher to purchase a home through Homeownership Program. So hold on. So you telling me we can buy a house with a Section 8 voucher? That's what I just read. Let's keep going. This program allows eligible families to use their voucher to help with monthly mortgage payments instead of rent. So instead of using your Section 8 voucher for rent and it going to the landlord, you basically can use it to help pay your mortgage. Hold on. So you telling me low income on Section 8 can use that same voucher to pay for a mortgage? Let's keep going. Let's see what else they talking about. Okay. Here's how it works. Home ownership option. The Housing Choice Voucher Program, Section 8 offers a home ownership option that allows eligible participants to use their voucher to purchase a home. Assistance with mortgage payments. Instead of paying rent, the voucher can help with mortgage payments, including principal, interest, taxes, and insurance. Okay, let's see what the eligibility is. Participants need to meet specific eligibility requirements, including being a first-time home buyer or have a family member with a disability, having stable income, and completing required home ownership counseling. Excuse me. Okay. Local Housing Authority. The specific rules and procedures for using Section 8 for home ownership are determined by local public housing agency, PHA. Okay. Okay, let's read what they're saying the example is. Let's see what that's talking about. Kansas City example. The Housing Authority of Kansas City, HAKC, offers a home ownership program where voucher funds are deposited into the family's bank account to help with mortgage payments. So basically, what they telling us is instead of using these Section 8 vouchers just to rent and keep being an ongoing renter, we can actually use this same voucher to help pay our mortgage and actually build equity and buy a property. That's crazy. I don't know how many of y'all know this, but if you didn't, you know today. And if you got a Section 8 voucher, I suggest you use it because y'all know what's going on with all this voucher talk and Section 8 talk. Ain't no telling how long they're going to have this program around. So use it and abuse it to your advantage. Let's see what else they talking about. Home ownership counseling. Home ownership counseling is often a requirement to ensure that participants understand the responsibilities of home ownership. So basically, they're going to send you through a wave of counseling, probably some videos. You're going to have to sit down with some folks. They're going to let you know everything you're about to get into for as home ownership so they can make sure you're ready. Not available for everyone. It's important to note that not all PHAs offer a home ownership option with their Section 8 program. So everybody don't have it, but if you got a Section 8 voucher, I get on their bumper and see. First-time home buyer. In many cases, the program is limited to first-time home buyers or those with a disability in their household. So, got to be a first-time homeowner. So they say, but they say the rules different for each municipality. So look up your municipality, do your own due diligence. You can go verify this with them and get all the steps and details of what you need to do. Now let's keep going. Let's see what else they got. Let's click on this. Yeah, let's go here. I want to go here. All right. HCV Home Ownership Program. I'm not about to read all of this. We're going to go over some of some of the headlines though. What if my local PHA does not offer an HCV home ownership program? Community stakeholders and residents are encouraged to contact their PHA and ask them to participate in this program. So if they don't got it, then everybody, as many people as you can get together, all y'all bombard them people. Blow their emails up, blow their phones up, let them know, hey, we want this home ownership program in our city, state, municipality. HCV home ownership dashboard, okay. PHA resources for implementation. You can read all this on your own. We got more stuff to go over, so we're not gonna really dive too much deep into all of everything. Keys to home ownership quarterly committee. HCV home ownership webinar. That sounds like one of them counselor programs that you're gonna have to go through so they can let you know everything you about to get into when it comes to owning a home. HCV home ownership guidebook, housing counseling. There I go again. Home ownership fees. HUD provides a special $1,000 fee for every home ownership closing. In addition, HUD will also fund a one-time $500 special fee for each newly created HCV home ownership program. At any PHA in CY 2023. I don't know what that CY 2023 means. I guess that means the year 2023 and beyond. But do your own due diligence. Home buying programs by state. Home ownership regulations and forms. All right, that's enough of that. This is what I really want to go to in here. Let's go to her. Let's look at the map. Let's see where this program is available at, because we want to know where we can do this at. Okay. It ain't letting me scroll, but it's cool. You can't see it, but I can. And a dark blue indicates a greater number of home ownership participants. Gray states/territories have no programs. Man, so only one that don't have a program is, what is this? Let's see. Is Wyoming. That's it. Everywhere else got the program except for Wyoming. From what it look like Texas and New York, they going crazy with the program. They the darkest blue. So New York got active home ownership participants, 870. 870 people right now in New York is using their housing voucher to help pay their mortgage and buy them a property. Why ain't you using it? PHAs with HO programs. So that means 31, they have 31 PHAs that had that program available. Let's see what Texas talking about. Texas right behind them with 802. 802 participants and 36 HO programs, home ownership programs. Now let's get a little personal. Let's go where I'm from. Let's see what we doing in that Mo. What we doing in Missouri, man? What type of points we putting up in Missouri? Active home ownership participants, 182 in Missouri. PHAs with HO programs, 14. So it's 14 different PHA programs with home ownership programs and 182 participants. Let's dive a little deeper. Where it go? There it go. Okay, this is 182. Let me see if I can scoot that over for y'all a little bit for y'all to see that. We ain't really caring about the percentage of the program is home ownership. We don't care about that. Home ownership participant. This is what we want. This is what we care about right here. So in Lincoln, they got 41. Lincoln cutting up. Lincoln out there, they out there buying them properties. Shout out to Lincoln, man. Shout out to Lincoln. KC, they got 38. KC right behind Lincoln. St. Louis Housing Authority, we only got 18. Come on, man. We got to get that number up. We got to get that number up. It's here. We got to get that number up. Go blow these people up, man. Go get you a property, man. Okay, Housing Authority of St. Louis County. We only got 18. So in total, between the city and the county, we got 36. So we still behind KC with the city and the county. Franklin County. Let's scroll down a little more. St. Clair County. St. Francis. Look, what? St. Charles got 0. Man, St. Charles got 0. Sykeston 0. Jefferson, Missouri 0. Mesco, Missouri 0. Man, go get these numbers up. All these programs not even being used. Look at all these places ain't even using. They're not even using it. Not even using it, man. Go blow these people up, man. Go get y'all some properties, man, and use your voucher to do it, man. It's only 182 out the whole state of Missouri. Now let's get up out of here. Now that we know we could purchase a home with the HCV program. Now we know we could purchase a home, right? Let's do something else. Let's go back. Let's see how we're going to actually be able to purchase this home. Because knowing we could purchase a voucher without having a way to get in, it don't mean nothing, right? Let's see. There we go. Let's look up the loan qualifications. Let's look up the loan qualifications. Okay. Hopefully y'all can see this. I ain't good with all this. I'm decent, but I ain't good with it. Okay. Y'all should be able to see that now. Let's go through it. To qualify for an FHA loan, you need to meet several requirements. Primary focus on your financial health and the intended use of the property. Here's a breakdown of key FHA qualifications. Credit score. The FHA's minimum credit score requirement is 500, but many lenders will require higher scores such as 580 or even 620. With a credit score of 580 or higher, you can qualify for a 3.5% down payment. Let's see right there for a minute. 3.5%. That's all you need. If your credit score is between 500 and 579, you may still qualify for a 10% down payment. So basically, your credit score lower, you're gonna have to pay more. So we want to be up here and higher. We want to get that credit score up because we want to pay this 3.5% right here. That's what we want to pay. Now let's go to the down payments. The minimum down payment required is a 3.5% for borrowers with a credit score of 580 or higher. So we need a 580 or better. Borrowers with lower scores, 500 to 579, need to make a 10% down payment. Gift funds can be used for the down payment, so you can be gifted the money. This one right here, big key. Debt to income ratio, DTI. Your total debt should generally be less than 43% of your pre-tax income. In some cases, a higher DTI may be allowed if you have compensating factors such as a strong credit score or significant cash reserves. I love them cash reserves. All right, debt to income. Basically, what they tell you is the amount of debt you have versus the amount of income you have before it's taxed needs to be below a certain threshold, which is 43%. Me personally, I don't like that 43%. I like to zero it out. Zero out everything. Everything besides probably student loans. Because student loans be high. And that's a lot. It's going to take a while to pay it off. But the car loans, the credit cards, the personal loans, any of those type of payments, zero them out. Get them to a zero balance. We want to eliminate them completely. Because outside of this threshold being able to be met, you know you met it if you got it at zero. And then also, if you're talking about buying a property's going to come with problems. You're going to have breakdowns. You're going to have toilets to fix. You're going to have all type of stuff that's going to happen out of nowhere. You don't want to have to make all these payments in your life. And then you still got to make your mortgage payment. And you got to fix some of your property. Let's go on to the next thing. Employment and income. You need to show proof of steady employment and income. There's no minimum income requirements for an FHA mortgage. No minimum income requirements. There's no minimum. No minimum. Don't let that go over your head. Lenders will assess your employment history, typically requiring at least 2 years of consistent income. So all you need is 2 years on your job. So many people got 2 years. Property requirements. The home must be your primary residence. It's another big key. It has to be your primary residence. Please do not go mess with these people and try to do this program with no rental property. You're going to get yourself in trouble. It must be your primary residence. Yours. You ain't working this hard to get yourself in position to mess it up, trying to be greedy. The property must meet HUD guidelines and undergo an FHA appraisal to determine its value and condition. The property must meet certain safety, security, and soundness standards. Okay. Mortgage insurance. FHA loans require both upfront and annual mortgage insurance premiums, MIP or PMI. which is private mortgage insurance. The upfront MIP is 1.75% of the loan. Annual MIP ranges from 0.45% to 1.05% of the total loan amount and may be required for the life of the loan. So basically, what they're saying is right there, you have what they call PMI. MIP, same thing. It's private mortgage insurance. They want to have an insurance on the mortgage just in case you default because you're only putting 3.5% down. So they look at you like a higher risk. So to ensure their investment as far as lending you the money, they want to make sure they got insurance on their mortgage. That way, if you default on that mortgage, the people who lent that money gonna still get their bread. They covering you know what I'm saying? Had a little bit of technical difficulties, man. Let's get back to it. All right. FHA approved lender. You must apply for an FHA loan through a lender approved by the FHA. Loan limits. FHA loans have specific loan limits based on location. Important note, even if you meet the minimum FHA requirements, individual lenders may have their own stricter requirements. So basically, you go in these banks, preferably your bank, holler at them, see what FHA programs they have available, and see what their specific qualifications are. Now, let's see what we gotta do next. All right. Yes, now we're going to try to basically, what we're going to do now is we're going to combine both of them programs. We're going to combine the Housing Voucher Program with the FHA program. Yes, it is possible to use Section 8 Housing Choice Voucher funds towards buying a home with an FHA loan. Although it's not a direct combination of the two programs, Section 8 primarily provides rental assistance, but it also offers a home ownership program where vouchers can be used to help with monthly home ownership expenses after purchasing a home. So we can do this. So we can mix these two programs. All right, let's see how it works. Here's how it works. Section 8 Home Ownership Program. The Housing Choice Voucher Program, Section 8, has a home ownership component that allows eligible families to use their voucher to purchase a home. FHA loan. Participants in the Section 8 Home Ownership Program can apply for an FHA loan to finance the purchase of a home. Voucher assistance. Excuse me. Once the home is purchased, the Section 8 voucher can be used to help with monthly mortgage payments, property tax insurance, and other eligible home ownership expenses. Verification and documentation. Lenders will verify any document the recipient of Section 8 subsidies when assessing the borrower's ability to repay the loan. Y'all excuse me for my reading on these cameras and shit, man. I promise y'all I can read. Verification and documents. Lenders will verify the document with the recipient with the receipt of Section 8 subsidies when assessing the borrower's ability to repay the loan. PHA approval. The local public housing agency, PHA, must approve the home purchase and the use of the voucher for home ownership. So basically, FHA got to approve it. Housing Choice Voucher Program people got to approve it. Important considerations. Not a direct combination. Section 8 and FHA loans are separate programs, but they can be used together in home ownership context. So they just told us right there, we can use both of these programs. If you have a voucher, please use both of these programs to your benefit. Important, home ownership voucher program. You need to be enrolled in the Section 8 home ownership program to utilize the voucher for buying a home. Waiting list. The Section 8 home ownership program is popular. No, it's not. They lying. It ain't popular. Most people don't even know about it. And there may be lengthy waiting lists for participation. So what? So what else we got to do? So PHA requirements. The PHA will have specific requirements for the home, the loan, and the family's income and eligibility. Income and expenses. The PHA will determine how much of your income will be used for housing expenses and how much the voucher will cover. So basically, just like when you buy, just like when you rent a place, a portion of it gonna go to the landlord for your rent, and you might have to pay a portion. Now, we ain't done yet, man. We ain't done. This is what we start cooking with grease at. Man. Let me show y'all something. This where we start really turning up at. Okay. This where we really start turning up at. Because now we know we can use both of them programs together. Now we know we can use both of them programs. What the hell am I spelling? Now we know we can use both of them programs together. Let's see how we gonna get a property. Okay. And I already got me preset in there. So, okay, home type. We only looking for. We ain't trying to get no single family. We trying to get a multi-family. Because with FHA, it has to be a residential property. And let me break down what residential is. A residential property is a 4-unit with a storefront, up to a 4-unit with a storefront. That means one single family, duplex, triplex, quadplex with a storefront is still considered residential. 5 units or more, you turn it into commercial. That's a whole different conversation. So for this FHA program, and mind you, you don't have to be a Section 8 voucher holder to participate in FHA. FHA is for anybody. So that means anybody with that's a first-time home buyer can purchase a 4-unit with a storefront through this program, putting 3.5% down. So don't let these big numbers intimidate you. Now let's see what we got going on here. Okay, here's like a multi-family right here. We just gonna do a little example just to show y'all. Okay, before we even get to that, let's see what the down payment will be. Now don't let this big number fool you. Can you see that? Can y'all see that? No, y'all can't see that. Okay, y'all can see that. This number right here, do not let this number scare you. Don't let it scare you. Let's pull out our calculator. Let's break this number down. Let's just say 375,000 minus our 3.5% because we want to get our credit score over 580 so we can qualify for that 3.5%. That's only $13,125. That's a lot of money, but it ain't a lot of money. That's money we all can touch. That's money we all can touch. We can touch that. People get income taxes, all type of stuff. Accidents, lawsuits. We can touch this type of money right here. And if you can't, that's when you come holler at the GOAT. You know what I'm saying? I'll show you how to run that up. We can run that up. Trust me, we can run that up. Now, this is why the 580 credit score or higher is so important too. Let's start that up. 375 minus 10%. That's the difference. 37,500. That's a whole lot of money. It's a whole lot of money. Not all the money in the world, but it's a lot of money. A lot of people, it'd be hard for them to run that type of bag up to be able to put down on a property. And in my opinion, you should have some reserves after you put your down payment anyway. I say at least 10 grand. But for what we're talking about right now, this is why the difference in the credit score is so important. So a 579 to a 500 to a 579, this is what you will pay. And having 580 or better, you'll pay 13,125. That's the difference right there. That's a huge difference in bread you got to drop. Because all the other money you could have put on top of there, let's actually do the math. We ain't got to be, let's not be lazy. We talking about buying a whole property here. Let's kind of run some real numbers. Oops. Yeah, minus 10%. That's 37.5. So minus, oh shit, 37.5 minus the 13,125. That's almost a $25,000 difference just for having your credit score at a different level. So get that credit score up as high as possible because we could have saved 25 racks and bought the same property with 13,000 versus 37. Now let's get back to the property. Now, the actual property itself, what we want to do is we want to grab a 4-unit. Now let's kind of take a look at this 4-unit. Let's see what we're doing. This is just an example property. I'm just trying to show y'all an example of what's the possibilities. If you get yourself in position, because that's all this game is about, getting yourself in position. Look like a fairly decent property. Could be a little better, 375, but it's a 4-unit though. And we just trying to get our foot in the door. People be too picky and trying to get your foot in the door. The name of the game, get your foot in the door first. We can level up later. This is why I recommend a 4-unit instead of a single family. Now, depending on the size of your family, it might make sense, might make more sense to get a different amount of units. But you want to try to go for a 4. And if you can, it's going to be hard to find, especially depending on what city you're from. But you can get a 4-unit and a storefront running this play. So that's what you really want. That kitchen look, but it's only one. These ones. These are 1 bedrooms, 1 baths. But this is just an example, y'all. It's just an example. So don't get too technical with it. Don't get too serious with it. Just gonna do a little overlook of the property, a little overview. $375,000. We get 4 units, and that's only gonna cost us $13,000 to get in. So now let's go back to the top so we can break this part down. Now, with this 4-unit, and like I said, you can get up to a 4-unit and a storefront, which will be kind of really hard to find, but they out there. So it's up to you to do your due diligence and scrub the internet, whatever city or state, because you can take these vouchers and do this program from state to state. You don't have to do it in the state you live in. You can figure out the rules of the next state and get all your ducks in a row, and you can take this voucher and this play and run it in a whole different city and state. So if you don't want to live in your hometown, you don't have to. You can take this voucher on the road with you and this play. So this is the importance of the 4-unit though. Let's get back to that. Now, these are the 4 doors. Now, for this example, you're going to live in this one right here. This one is going to pay you income. These 2 are going to pay for the whole property. So you have 2 units paying for the whole property, taxes, insurance, private mortgage insurance, putting some of this money up for maintenance because you're going to have maintenance. Those 2 units pay that. This unit right here pays you. This unit right here, this is the unit you live in. So at that point, you're living rent-free and mortgage-free technically. This unit is paying you passive income, and these 2 units are paying for the whole property. And you did all that off FHA and with your voucher, because your voucher going to help pay the mortgage too. So depending on what your income is, you might be able to live here and get paid off these 2 units and put this 1 unit towards your mortgage. So 1 unit could potentially go into your mortgage. These 2 units go to your pocket, plus you live here for free. Come on, man. Hey, man, give me my flowers, man. Hey, right there, I need some hands clapping in the give me a hand clap, man. Put some hand claps in the comment section, please do. I take that gracefully, because most people don't know this and they don't know you can run this type of play. So you living rent free. These 2 units paying you, this unit paying your mortgage, or this unit you live in, this unit pays you, these 2 units paying for the whole property. The whole property. So you really building wealth in real life. Not none of this internet mumbo jumbo. And this might seem like a lot, but it ain't. It's just all about getting yourself in position to be able to take advantage. So another thing about having a 4-unit versus a single unit or a triplex or a duplex, one of the other things that benefits you having these 4 units, these 3 rentals, because you have to stay in there. It has to be a residential. Do not try to run this play and try to rent all these properties out. You're going to get yourself in a jam. And if you work through the whole program to get yourself in position to be able to take advantage of a situation like this, I don't want you to get yourself in no jam. So don't do it. Now, back to what I was saying. These 3 units right here that are rented out. Let's bring our calculator back out. These 3 units. Let me move this calculator. These 3 units right here, right? Let's just say for this example, they paying $1,000 a month. That's $3,000 a month. $3,000 a month. Now, before we even get to that, let's just say you make $50,000, but you need $80,000 to qualify for this property. Or let's just say you make $70,000. We're gonna do both of them. You make $70,000 and you need to make $100,000 to qualify for this property as far as your income. So let's do 3,000 times 12. So that's 36,000 plus your 50,000 at your job. That's 5,000. Now we at 86,000. We meet the threshold. On paper, you make 86. They will use the future rental income from these 3 properties to go with your income, your annual income, which is, we just did it. Let's do it again. 3,000 times 12. This will be added to your annual income. So on top of all the other benefits I just broke down, that's another benefit of doing it with a 4 unit, right? So add that plus the 70,000 you make at your job. You make your 100,000. Now you qualify on paper for your income. Now also, let's add in, let's do it like this. Let's just say if you find that 4 unit with a storefront, which is kind of hard, but they out there. So you got 1, 2, 3. Let's just say them 3 units plus the 4 unit. Plus the storefront. Each one get rented out for $1,000 a month. So that's 4,000 coming in. Plus you live in here. You live in here, 1,000, 2,000, 3,000. And let's just say a storefront over here. That's 4,000 a month. Times that times 12. Now we have 48,000 a year. That's almost 50,000 a year added to your income on paper. On paper, to help you qualify to purchase this property. And if you like me, I would do it like this. You can get ready to calculate now. I would do it like this. I'll be making 1,000 out this unit, 1,000 out this unit, 1,000 out this unit. That's 3,000. These 2 will pay for the property. This will pay me in passive income. I will live here. And in that storefront over here, I start my own business out of it. And I start that business, whether it's a full-time or a part-time business, on my own storefront, I'll be making $5 to $6K a month out of it on the low end. So let's do the math on that now, because this is where it started to get real. So 1, 2, 3, you got that 3,000 a month coming from the properties, plus another 6K coming from the storefront business. That's 9,000 a month times 12. That's 108,000. 108,000 on paper as far as your income from them 3 units and making money out the storefront. That's 108 bands a year. Plus, let's just say it's a part-time business. Plus your 50,000 at the job. Come on, man. Come on, man. Hey, men lie, women lie, numbers don't lie, man. So I'll be running in like this. This is how I'll be running it up. I get my little storefront over here. I get these 2 units to pay for the property. This unit to pay me. I live rent free. And then I run up 5, 6 grand a month out my storefront. That's what I do if I was you and I was able to run this place. Now, if you can't find a storefront, it's cool. It don't matter. Still get you a 4 unit. If you can't find a decent 4 unit in a nice neighborhood or whatever you want to be at, get you a 3. You can't find a 3, get a 2. You can't get a 2, get a 1. And anybody can run this FHA play and get this property with 3.5% down. You don't have to be a Section 8 voucher to do this. So you can still, whether you're a Section 8 voucher holder or not, you can still get you a 4 unit with a storefront and run a similar play. You just won't be able to have the Housing Choice Voucher program to help you pay for the rent. That's all that'll be right there. Folks hitting me up. Now, let's see. All right, that's enough game for one day. We've been on here for a little minute. Yeah, and I just gave you all that in a very, very short time frame, man. I don't really like that, man. In a very short time frame. Now, I just showed you how to make passive income. I just showed you how to build wealth, build equity, have 3 rental properties with a total of 4 doors and possibly a storefront. And I showed you how to do that with a Section 8 voucher in, less than an hour? Listen here. You might want to get in, bro. For the price of the brick go up. Before the price of the brick go up, I just told you a 6-figure play and how to build wealth and equity in real life in under an hour. So when you see the price of that brick go up, I don't want to hear no complaining. I don't want to hear no crying. Man, I don't really like that. I really like that. Now, if I was you, what I'd do if I had a Section 8 voucher, what I do is, first thing I do is, as soon as I get a chance, the very next business day, I'll be on the phone with them people. I'll be on the phone with them people. Hey, listen, I got a Section 8 voucher. I'm trying to buy a property. How do I do it? Them three, simple as that. How do I do it? And they're going to run it down to you. Every step you need to take. Well, you have to do this. I'll be writing it down. Write it down. I got to do the writing down for y'all. Write it down. Okay, I need to do all these. Then I call my bank. Hey, what type of FHA programs y'all got? What all I need to qualify? Write that down. Some of these things you're going to already have in order. Some of them you're going to have to work on. But I go check off every box. And I ask the people at the bank, right now I get a Housing Choice Voucher. Do your FHA program works with a Housing Voucher program? They're going to give you all the answers you're looking for. And I write it all down and I go check off every box. I check off every box. And then I pull up on them folks. And it's whether you want to do this in your hometown or out of town. I go do my due diligence and I pull up on them folks. Now, if you want me to get you a step-by-step plan, I can't do that for free. You're going to have to pay me. My time is valuable. I got things to do. I can't do that for you. Go do your own due diligence. Go verify everything I just told you. Go look into it. Go get the steps and run down a list, check off every box, and then pull up on them folks and get you a 4-unit or a 3-unit. Or a 2-unit, or a single family. I recommend getting a multi-unit because we're trying to really build wealth. But depending on your situation, the size of your family, it might not make sense for you to get a 4-unit. 4 units don't usually be that many bedrooms in each unit. Same thing with triplexes. The most I really see on a triplex is 3, maybe 4 bedrooms. Some people have bigger families in it. And on a duplex, same thing, maybe a 3-bedroom or 4-bedroom. So if that's not enough rooms for you and your household, cool, get the 1-bedroom. Get the single family. That's all good. But get you something to where you can use the Housing Choice Voucher to help pay your mortgage and build equity and build wealth and own your property and let them folks keep trying to play on your top. Are you Section 8? He or she low income. And then pop right back out on them. What you mean? I own my property with my low income self. I'm trying to stop cursing. I'm trying to stop cursing for some old personal reasons. But yeah, I own my home with my low income self. Cause we don't do that over here. We don't do all that judging people, man, for where they at. People at where they at, and we trying to get them that way. So make sure y'all blow this up, man. Blow this up for me, please. Share it, like it, comment, do all that stuff, man. Blow it up, share it. Let somebody see this, man. This can help somebody. Somebody that see this video gonna take advantage of what I just told them, man. Go take advantage of it while it's still available. Please do. And tell them I sent you. Now, take that game, run with it. Go that way. Go that way. And meet me at the top, man. I'm going to holler at y'all in a minute.